Hey traders, Jeff Yates coming to you from Full Throttle Traders. Today I want to break down an intraday trade that we traded on Boeing. And there are 4 or 5 things I want to really bring to fruition today when it talk about these intraday plays. Lately, the intraday plays have been tough because the market's been swinging low, swinging high, back low, choppy in between. And the ones that have the corresponding larger time frames that match that multiple time frame analysis, the issue is they're running so darn far before you have the pattern set up. If you have a pattern set up, so by the time you take the pattern, it's a short life left in the actual range of the stock. So I'm going to show you one that worked out here using Boeing. We follow the same things, but there's a few characteristics in here that I think you'll start to understand and learn to live by. If you follow this one principle, the main principle in here, outside of multiple time frame analysis here, it will change your day trading, will change your intraday trading to where you could be at a point where you could actually earn a 6-figure income potentially before you even make your first options trade, just trading 45 minutes of the day trade market. So take a look, watch how this works. Okay, first and foremost, you must have your multiple time frame analysis in check. Meaning, you want that daily chart to have some period of void. Now, if you're new to trading, what is void? It's void is when you look to the left and there's nothing to stop that. In the short term, you can see it back further, nothing to stop that price to go down in the short term. Because when price is close to your new price coming down or up, it creates this impact of supply and demand. It's resistance levels all in here, or support levels in this case. And it doesn't flow. You don't have the follow through. When that resistance is back, or that support is back further, and the further the better, the more likely it is to flow and ignore some of the short-term resistance points, whether you're going short or long. Another good reason to go back here is that you actually heal a stock by going through price and time. So time would be taking away demand or resistance by just going through a consolidation or maybe a big move in one way or the other. That will loosen up supply or demand. But in the short term, you're getting these off the gap plays. And again, this is just the first style that we do in the mornings. We have a few different styles, but this is number 1. If you look at the 13th on here, June 13th, we were definitely gapping under. The first thing I want to point out to you is that the daily chart was gapping under actually this is on the 8th. Let me show you the 8 on the daily chart here. So on the 13th, you can see the daily chart was gapping underneath this 8, and then subsequently the next day gapping under the support area and also a green bar. Now, this green bar is more powerful if it closes at the high because the short covering becomes more pronounced. But nonetheless, gapping under support and getting under the 8 for the first time and support was a new thing. Now, Boeing bounced back, but it doesn't matter because we made our money on the short side early on and got out of the trade. Now, you can see, obviously, it picked up in volume. But let's drill down to the 2-minute chart and kind of give you a better feel what that looks like when you're actually trading. So if you look back to the 13th, I'll pull it up here and kind of show you what I saw here. The first thing I want you to understand is that many times if you're trading the opposite direction of the market, yes, you heard me right, the opposite. If the market's going higher, I don't want you looking for longs because it's easy to find the long when the market's going up. If the stock is truly a derivative of the market anyway, and it is, why in the world do I want to trade in the short-term time frames when I don't know what's telling the truth? But I do know what's telling the truth. If the market's going up and the stock is going down or not going up, that's truth. That one you can rely on. That's what we call relative weakness, right? And the same thing in reverse. If the stock market's gapping down and your stock is holding tight, much like we see in the gaps, that's truth, at least for the short term. That's relatively strong. But when I'm scanning and looking for these plays and I don't see any specifically on my gap list, I'm actually watching what the market does. In 2 to 3 bars in the 2 and 3 minute chart up, I found Boeing sitting down here at the bottom in here with a void to the left. Notice there's nothing to the left for some time. So it's more free to run lower quicker and it trades cleaner. So the pattern setup was like this. Again, most of these patterns operate like this. They come out of the box, they go straight up or they go straight down, like one over I can't see it on these three here, and you don't have a chance to get into the play. And if you do try to take these plays, notice you have a short-lived top in here because the average trading range has already been exceeded. Remember, each stock is like a muscle memory. It has an average trade that it trades every day. Could be $4 including pre-market, could be $2. When you trade Ford, are you going to look for a $10 move in Ford F? Probably not. You can look on your charts. I have mine sorted by the average daily range. So I know basically what those stocks are willing to give. Now there are some times that you can actually see Smuckers here on the daily chart far exceeded daily range. Why? We gapped into void down here and the trade went like 4 times. So I tell our traders in the room, so when they're gapping into pure void, always allow 2 times the average ATR. So if the ATR was $3, it can run 6. And in this case, it ran about 4 times to 5 times. So it's rare that it does it this far, but this is on SMJ. It can do it, but plan for 2. Going back to Boeing, this is the trade here on the daily chart. Go back to the 2-minute chart. You can see right in here, it's trading clean, going down, going back up, testing VWAP, not taking out the high of the day, right? Testing the 9 EMA, which you don't have to have that on this particular chart, it's on this for different reasons. And then back down here, and then back up a retest, and back down, and then right back up. But this time it didn't get up that far, right? You had VWAP beginning to move lower, that's the magenta color line down. But see how clean it's trading? Wide range bar ignited a new move downward here. See that wide range bar on volume. And the key bar was this one. As long as it didn't kind of go back up more than 60%, back over VWAP, this is going to be a sweet pattern. We took the low right here, just before the low of the day, and it was easy money. I don't think the thing backed up on us a nickel. We could have had a nickel stop and been fine, which not always the case. The cleaner you find these, the better support or the better void to the left, the more practical these stocks are. Now this is strictly a breakdown play, right? We also use pullback plays to get in place, but for the first 15 to 20, 25 minutes, I focus on breakouts and breakdowns, and then I come in once they've been trading long enough to find the stuff that's holding on the right angle of a pullback. In other words, I don't want to see straight down pullback. I want to see if it's bearish in the market, I want to see the stock pulling back, but at a very tepid angle. Not straight down, not even 45 degrees, 20 degrees, pulling back like this. That's the one I'll buy on the pullback to go higher because it's showing that it has relative strength, assuming you're going long, if the market's going lower. And usually those comes in the confines of gaps. But the first 30 minutes, I want to catch one of these trades because we can definitely get 2 to 3R very quickly out of this trade with not much risk on there as well. And you can see this thing capped out. I don't know, we probably made about 2.5 R on this very quickly and got out a little bit prematurely, but we take these rides down and we don't know when or where they're going to turn. Now Boeing did a V bottom and went back and took off high of the day ultimately, and then even later the next day. So you got to take your money where you can. Just make sure you find the patterns that are trading clean, number one, has nothing to the left, void, so it has open space to run, in this case a short, trading clean, and you want to see the price not just keep going down 5 bars on a 2 and then going sideways for 3 bars. If you're taking a breakdown, you don't want to see 5 bars down, 2 bars sideways, and 5, and then look for a new short. It won't work most of the time. In general, you want to see if it goes down 2 to 3 bars, you need a consolidation equal to that level, right? So if I'm down 2 to 3 bars, if you measured it, it would measure out like this. So you want your consolidation to be equal to the drop, and then the new consolidation. As long as there's void to the left, it's trading clean, has volume, it's relatively weak, in this case a short play, meaning the market is flat to up. This is not, because that's a truth teller right there, that it's not lying, it's telling you the truth. It's hurt. Parts of Boeing are getting bought up, but the whole stock in general is being sold off, and that's where big money is, and that helps us find that big money. Now, if market just keeps sailing higher, poor relative weakness becomes what we call poor relative weakness. It actually can get bought. We know that. So you're going to run into times where that weakness does get bought, but more often than not, the market doesn't do that and take your stock away. You're able to trade that down. It gets a little more choppy sometimes when that happens. But this was a perfect play, almost needed no stop. We gave it a very shallow stop at probably 75 cents. This thing went several dollars all the way down to this area before it decided to bounce at this area. So love the play. More like this at Full Throttle Traders. We trade this every day. come check out our free trial at fullthrottletraders.com. Get your 7-day trial. Come in as trade these day trades in the morning. We move into the credit spreads about 10 o'clock. We do orbs, ORB plays, breakouts 15 minutes. We do special types of credit spread plays, back into option plays, and a lot more. Check us out at Full Throttle Traders. See you in the room.